Hello and welcome to this week's edition of Econoday Unplugged on Thursday, 6th of August 2020. Mark Pender stateside, Brian Jackson's an early riser in Sydney, and I'm Jeremy Hawkins in London. While by and large, policymakers around the world remain captive to the coronavirus, which, with many countries now facing rising new cases again, may well mean that monetary and/or fiscal stances will need to be loosened still further. And that's almost certainly a key reason why stocks are still faring so well. Last week, the S&P 500 ending its best July in a decade, while the Nasdaq, which was up nearly 7%, managed yet another record closing high on Wednesday. So the coronavirus is good news for stocks then. Somehow it doesn't seem to add up. Anyway, adding up the numbers in Asia is Brian Jackson. So, Brian, economic or COVID, take your pick. How's the region been doing since you joined us last month?
Well, obviously, there's a big correlation between those two things right now. And I mean, let's just look at the numbers first. The economic numbers. We've had the PMI surveys come out at the start of the month, so that's always a good snapshot of how things are going.
Mm-hmm.
And we have a bit of a divergence there between China and the rest of the region. So China, they obviously were hit first by the pandemic, but the numbers that we've had out for a couple of months now have shown that it's bouncing back pretty strong. Obviously, not returning back to pre-pandemic levels of activity, but recovering sharply from the initial impact of it. But if you go across most of the other major economies in the region, what they're showing is that activity is still contracting, not at the same rapid pace as the initial impact, but still coming off and not showing signs of stabilizing yet and starting to recover. And again, that's very much driven by the scale of the public health problems in those countries, and how quickly they're able to ease some of those restrictions. In China, we've if you look at the coronavirus numbers out of China, they've stabilized and really lowered quite dramatically over the last few months, and that's allowed them to get back into business. But that's not the case elsewhere in the region, where we're seeing some serious second wave type of situations in parts of the region. Some cities like Hong Kong, Tokyo, and also here in Australia, in Melbourne.
Okay, has there been any noticeable impact so far on the likes of the more up to date? So the survey numbers, be it consumer or business, has the pickup in the virus started to impact that yet? I just say that because so far the latest surveys coming out of Europe, certainly by and large, businesses still seem to be a good deal optimistic, obviously when they were during the worst of the period, but typically speaking, the trend in optimism still seems at this stage to be on the up.
Yeah, well, I think obviously when one of those measures sort of ask people to predict where they think output will be in 12 months' time, or where things will be in 12 months' time. And when they've had such a big hit in the last few months, then it's possible to predict that 12 months' time we're going to at least see some sort of recovery from where we are now. So to that extent, yes, there is a little bit, and that does obviously help to a certain extent. If you're thinking about laying people off, you might sort of have second thoughts and say, okay, we can get through the next 6 months or so. We won't want to cut our workforce too much. So that definitely does help. And you're seeing wage subsidies in some parts of the region as well help that decision. So I think there's still a sense that we will return to normal at some stage, but it's not in the next 2 or 3 months, obviously.
Right. And also, I suppose, for those, obviously, all the regions are being hit now. It doesn't really matter where you look. But for one of the counterparts of the region, which is perhaps being hit the hardest in the sense of from the currency markets, the dollar, which is down significantly against all the majors over the last month or so. One of the counterparts to that has been the relative strength of the likes of the Aussie dollar and obviously the Kiwi dollar as well. Is that causing the central banks any problems, given the potential new worries they might have stemming from the coronavirus?
Oh, sure. I mean, they've eased policy rates during the initial reaction to the pandemic, to try and provide support. But the currency is going the other way, and is not obviously going to do any favors for the exporters in those countries. And we have seen the Australian dollar often be a swing variable that helps the RBA in its job going back many years now. So
Right.
that's definitely complicating it. But they're used to dealing with swings in the currency, and so I don't think that they're going to be too concerned about the moves yet. But if it were to keep going, that's just another factor they have to take into account. What they're actually saying is that they've sort of done their bit on monetary policy. They've provided pretty clear signals, though, that I think that the government in Australia has more room to move on fiscal policy.
Yeah, I think that's not an unusual theme we're seeing coming out of a lot of central banks, isn't it?
Yeah, and what you're seeing, across the region is that there actually hasn't been a lot of moves by central banks over the last few months. After the initial response to the pandemic, they've sort of just held steady. Almost as if they think, well, there's only so much we can do now. It sort of depends on how the public health measures go, and we're just going to wait it out for a while. And that we had that just yesterday with the Reserve Bank of India. They were very aggressive cutting rates for a long time, and the consensus was that they'd go again this month. Yeah. But what they did is they said we're just going to hold off for the time being, because we've actually seen a bit of a spike in inflation, and we've got to just also think about that.
Brian, this is Mark. On the Reserve Bank of India, they're at still 4%, their policy rate, so they still have a lot of room to go lower. Was that really a surprise that the PMIs from India weren't very good at all for July?
Yeah,
I think both of them were below 50 still.
Yeah, I think you're right. Being at 4%, they definitely do have scope to go further, and they acknowledge that in the statement. But they made a pretty detailed explanation of what they were thinking this month. So they've already cut rates very aggressively, so, going back actually before the pandemic to the start of 2019. So I think that's still sort of in the pipeline, the impact of those previous rate cuts. And they also just noted the fact that inflation has picked up in the last couple of months. For a couple of months, they were flying blind with inflation because the inflation numbers weren't published because of the national lockdown. Meant that the data, the data officials couldn't actually go out and collate the numbers. So, but when they got the number for June, it was at 6.1%, which is above their target range of 2 to 6%. And they're looking at the near-term inflation outlook, and they see upward pressures from food prices and fuel prices. So they've got these sort of conflicting objectives of trying to make sure that inflation doesn't go too much further above the target, whilst trying to support the economy. And the assessment they made this month was that we've got a bit of time to just assess what happens with inflation over the next between now and the next meeting. We've already done a lot to support economic recovery, and if we need to, we'll go again next meeting.
Did they say anything about their inflationary pressures being isolated, that globally there's deflation or disinflationary pressures prevalent?
Yeah, there's always, in the case of India, a very big, food component of the inflation basket, and so country-specific, India-specific food inflation pressures are a big part of their inflation story, and that obviously is very heavily dependent on the strength of rainfall during the monsoon season and other factors such as that. So, India's inflation story can sometimes differ quite sharply from the global inflation story.
Okay, great. Thanks for that, Brian. Right, we're moving right along to the States then. Mark, I guess it's fair to say a still very dovish FOMC last week, and particularly in light of what Brian's just been saying about the need to put more emphasis on fiscal policy. Where do we stand on this new stimulus package being thrashed about in Congress at the moment?
Well, one day it's good news and one day it's not good news. The last headlines I saw was the Democrats rejecting the unemployment, holding the unemployment benefit. So it's supposed to be at the beginning of the week. They said there was no chance it would get done by the end of the week, or that was the talk. Those were the reports. And then by Tuesday, those reports had reversed, and so we're somewhere in between. But
Have they not
it's
set some deadline for this weekend or something like that? Or was that not right?
yes, but these are not.
Possibly.
Yes, in cement or anything. It doesn't look like there's a lot of energy for another a massive round of fiscal stimulus, even though it may depend on tomorrow's employment report. Actually, it may have a big thing to say in the question. ADP came out with their guess or their their estimate for tomorrow. It was only 167,000. Maybe that's a normal looking number, and it's supposed to be 2 million. So, and that's what the expectations are for tomorrow, roughly. And if we don't get that, and we have unemployment claims that came out today for their weekly series, and the latest numbers that came out after the monthly report tomorrow have a sample, but they show maybe a little improvement, still more than 1 million initial claims filed per week. So if it is a weak number tomorrow, and there is a rise again in the unemployment rate, we could see more momentum pushing for a new fiscal package.
And what about the Fed? So Mr. Powell seemed to be, if I remember correctly, to quote, "We're in this until we're well through it." Does that hint there could be yet more to come out of the Fed?
It could. It's there, as all the central banks, the Fed has kind of been in after pulling all the levers earlier at the beginning, and really. If we look back at this the whole year, the reaction of the central banks, including the Federal Reserve, was very fast. I mean, they knew almost like a plan what they would do in a big emergency, and that is cut rates and buy bonds and protect markets, and that's what they did, and also back up loans, and that's what they did in a great massive way. So whatever policy nuances they have, or confined to things like they've already committed to as much QE as they can possibly do, or as they need to do. And so now it's like, well, are they going to firm up how they're going to explain forward guidance? And that's not a super powerful element of monetary policy. So, and they even delayed their decisions on that. So I think it's kind of a wait and see, like Brian was saying. The government has to come back in here now. It's their turn. They have more latitude right now, and so if Washington fails to do something, and the employment report is weak, well, then I guess they would have to start jawboning. Federal Reserve officials would have to get on the wires and start talking more emergency stimulus of some kind. So I think we would have to wait and see exactly what it would be.
Okay, can I ask you a political question, which I don't know if you'll be able to answer it or not, but there's talk that Donald Trump has been talking about possibly using his executive authority to extend, I know, some measures like supplementary unemployment insurance and the like. Can he do that by himself? So, how much of a package could he put through just using his executive privilege?
Well, he's been testing the bounds of executive privilege across so many different issues. And certainly he could put it out. Whether or not it would be rejected, the key would be whether or not it would be accepted by the Republican senators, the Republicans in the Senate. And they don't always go with what the president says. Like last week, floating the idea of postponing the election, that didn't go over.
Right.
So if the Republicans go for it, then I think that could definitely be a possibility of. And it would show, executive leadership in a critical moment if Congress does, if their hands are tied. And this is a difficult moment for the U.S. economy, the U.S. labor force. These are low wage workers are on the line right now, and so we'll have to see, what happens, but. It'd be interesting to see the play and what the administration's moves are.
Indeed. Okay, thanks for that. Right, what about my part of the world in Europe? Well, I suppose in terms of the sort of the COVID stuff, most of the medical experts over here seem to be surprised at how fast the lifting of restrictions has led to resurgence in infections. Over the last week or so, Spain's seen a sharp increase in new cases, but we've also had significant rises too in the likes of France, Germany, Italy, and perhaps more surprisingly in some ways, Germany as well. The UK also appears to at least bottomed, and we've got localised restrictions imposed over here now too. So surprise, surprise, already there are rumours doing the rounds that the ECB is getting concerned about what third quarter GDP is going to look like. And that's despite the fact that the second quarter, which came in on a flash number of quarter-on-quarter growth of minus 12.1, which is, of course, a record, but that was actually a little bit stronger than the central bank was expecting. I suppose from the economist's point of view, one good bit of news is that proof that data does still matter. That was that the Eurostat website fell over last Friday when the GDP release was actually came out due to all the heavy traffic. Anyway, it does seem that I suppose some of the differences between what's happening in Europe and elsewhere in the world at the moment is that there's still this issue concerning what happens to this coronavirus rescue fund that the EU Commission is trying to get voted on through all the various national parliaments at the moment. That's still in transit, and it's going to take a while for it to be delivered. So from an investor or a market perspective, the emphasis really is still upon the central bank and whether or not they'll be doing anything else. They won't be meeting until September time, but that's when they'll be updating their economic forecast. So if we are going to see something new, it's quite likely it will be coming out then. So certainly as far as monetary policy expectations are in Europe in general currently, it's still at least biased towards some kind of additional easing.
Jeremy, I have a question.
Yep.
You were talking about websites going down, statistical websites, which are very important right now. And I see on Wednesday, the UK has lined up GDP, industrial production, and trade all at the same time, early 7 in the morning your time. How is that working? Is there? I mean, I can tell you that, like some of the sites here, not the Bureau of Labor Statistics, which does the employment reports, but some of the other ones aren't as fast, especially the Bureau of Economic Analysis, I have to say, which does GDP. They're kind of clunky around the release time with all the traffic. How is the UK site doing?
Very similar. And it's a very good point. I mean, go back there forever, the UK economic numbers, the major ones anyway, from the official national statistics have been released at 9:30 in the morning UK time. That was changed earlier on this year when they decided that due to the coronavirus, or they didn't actually explicitly detail why, they announced that all the major numbers, so the consumer prices, industrial production, GDP, as you're talking about, they'll now be coming out at 7 o'clock in the morning UK time. One of the problems is, I think, that whether it's due to staffing issues or whatever, but ever since they've switched to the 7 o'clock release time, rather than the numbers literally coming out on the dot of the time they're supposed to be released, you're now talking about a kind of a trickle of the data coming through over the course of a couple of minutes or so. So whereas markets used to literally within 5 seconds, they pretty well had at least the headline numbers and be reacting immediately. Now, when we get, as you mentioned, next Wednesday, when we get this slate of real economy data, and the ONS likes to package different elements of the economy together now. When these figures come out, we'll be getting bits and pieces over the first minute and probably the remainder over the second and third minute. So markets really have to take that much longer to digest and work out what's going on. So it's certainly not working.
Has there been a lot of criticism about this new arrangement?
Not, to be honest, not really that I've seen so far. I mean, from my days when I was in the trading market, I mean, most of the traders weren't actually at their desk before 7 o'clock anyway. One would like to think that that's actually changed a little bit now. But no, I think it's kind of, I suppose, as Mark was saying, from his side, there's also issues to do with the release of the data. I don't know if it's affected your part of the world, Mark, but it is most definitely the case within Europe. I talked about the UK. In France, some of the Aussie numbers, so the national stats body there, their figures have either been changed changed, particularly the business confidence indicator figures. Sometimes they've been coming out at their normal time, other times they've come out perhaps an hour later or so. So there's certainly been some issues, I think, surrounding the impact of the coronavirus on the number of releases in general. Now, presumably, we'd like to think that once we get over this coronavirus issue, that it'll start to go back to normal again, but we'll just have to wait and see. But it is an issue for markets at the moment. Well, I should mention in terms of the big announcements this week, I suppose for us it was the Bank of England, which came out. The MPC made their August policy announcement today, which to no one's surprise was for no change in quantitative easing. The ceiling on that still stands at 745 billion sterling, and that's expected to be completed by the end of this year, or bank rate, which still stands at 0.1%. But there was an interesting change, which I guess is kind of symptomatic of what we're seeing from a lot of central banks around the world at the moment. And that was some new forward guidance issued. And that effectively boils down to the fact that the bank doesn't expect to see any tightening of monetary policy until, to quote, there's a clear evidence that significant progress is being made in eliminating spare capacity and achieving the 2% inflation target sustainably. And what that really means is that, well, we all know about this 2% inflation target. That's been around for a long time, but it really suggests that the bank now is starting to put more emphasis on measures of spare capacity. And as far as they're concerned, that really means the unemployment rate. So I think it really does suggest that the labour market figures now are going to be that much more important in determining whether or not the likes of the Bank of England is going to cut interest rates and go into negative territory, or more likely do additional quantitative easing, over the course of the next several months. It doesn't mean that they've abandoned their inflation target. They can't do that because it's set for them by the government. But it does suggest that they're looking at more than just inflation now in the current environment of the coronavirus and determining what they should be doing with policy, given the way the economy is performing at the moment. And I guess I should also mention, given there has been over the last 2 or 3 months, quite a lot of speculation about UK interest rates going negative, at least I should say the official bank rate going negative. Well, there's a new monetary policy report that the Bank of England issued today, their quarterly report. There's a fairly chunky piece they put in there about negative interest rates. And the bottom line to that would appear to be that they haven't ruled it out altogether. It is still in their so-called policy toolbox, but it's not likely to be introduced yet, but it could be in the future. And it seems, I suppose, sort of pigging back off what we've seen coming out the likes of Switzerland, they're concerned about the negative impact that negative interest rates would have on banks, which they regard as being key to the economic recovery. So I think at least it's probably fair enough to say that for the time being, UK bank rate has probably bottomed at 0.1%. It might possibly go lower in the fullness of time, but I suspect the economic numbers will have to turn a good deal weaker if that were to happen. What about anybody else's side? I mean, in terms of negative interest rates, I think, Mark, you said from your side the Fed don't really like the idea. Is that true for Asia as well, Brian?
It's definitely true for Australia. They haven't ruled it out, but they've made it pretty clear that they would like to see other options exhausted before they consider that one. And I think that's pretty much the same case for Reserve Bank of New Zealand. Obviously, Bank of Japan has been doing it for a long time now, but I don't think there's a lot of appetite for that, unless they really have to.
And that's still true of the Fed, Mark?
Ruled out, no chance.
No chance whatsoever. Even if we were, say, second wave, and we see we don't get recovery in the third quarter.
I guess don't ever say never. But if that's one of the toolbox, if that's what negative rates are, one of the tools that they have deep down in the very bottom of their toolbox, and it'd have to lift the box out and dump it out before they would do that.
And again, I suppose it takes us back to what we're chatting about, kind of in the intro, the side of fiscal policy. If we were to suppose that the administration can't deliver on another fiscal stimulus package and the numbers don't look too clever, does that mean the Fed's going to feel obliged to do something else?
Well, if they did do negative rates, that might smack of panicking, which you don't want to do you don't want to give any even a suggestion of that if you're a central bank. They would have to do some prior job owning verbal work before preparing everyone in some way that they would now consider this. It would be a last. I think the last thing that they would probably do. They might pull out other things that we don't even know about before that. That would be increasing loans and those kinds of things, I would imagine.
Yeah, good point. It's quite often for the likes of the Federal Reserve or any central bank, it's a fine line to walk between doing something which they think perhaps they should be doing, but also taking on board just how markets might actually interpret it.
Oh, I have a question,
Okay.
Jerry.
Yep.
Has ECB been buying Italian bonds and things? Update us on
Yeah. In terms of the emergency purchase program, the PEP, the Pandemic Emergency Purchase Program, yes, that is fully operational at the moment. It's flexible, so it's nothing like sort of the ECB original asset purchase program, which is still ongoing, which is running at 20 billion euros a month. But the PEP is something which is flexible, which they will, they'll be in and out of the markets according to when and if they think they should be actually be in there buying. But yes, that's actually going through quite nicely at the moment, and to all intents and purposes, it is by and large that their main quantitative easing tool currently. And it's going to be interesting, as I mentioned, when we get into September time, whether or not they actually decide to come out and increase it. They had obviously a lot of problems actually getting the agreement through to do this in the first place. Would they consider increasing at this stage? I'd have thought no, but again, a bit like everything else, if the numbers in the third quarter due to a second wave coronavirus or whatever don't prove to be as good as they should be, then I think the ECB, like a lot of other central banks, indeed, just reiterating what the B of E was saying this morning, they'll do whatever's necessary to ensure they keep the financial markets working and do whatever they can do to get the economic recovery in place, and of course for them that they can achieve their medium-term inflation target. Okie dokie. Anyone for anything else?
Yeah, I mean, I think the other factor we need to just at least mention is just US-China relationships.
Yep.
and how that is progressing,
or not.
and how that's impacting other parts of the world as well. There's so many items coming onto the newswire about this relationship. Just one I've noticed in the last 24 hours, you have for the first time I think since the US broke off official ties with Taiwan back in 1979. You have a cabinet level US official visiting Taiwan over the next week or so. The US Secretary of Health and Human Services, he's heading over there, and obviously China's not happy about that, and that just highlights, I think, the tensions that are in place at the moment. And I think what's interesting is how that might impact other parts of the world, in particular Europe. You've had the UK government reverse its decision to allow Huawei involvement in the 5G network, and so I'm just interested in what else might be happening in Europe about the US-China relationship.
Yeah, it's true. I mean, certainly relationships between particularly the UK and China at the moment are, well, not necessarily an all-time low, but the whole issue surrounding Hong Kong, as you mentioned, Huawei, it's really has sort of put the cat amongst the proverbial pigeons. So you're right. I mean, it's interesting in some ways, I think, how it almost doesn't seem to be having that much of an impact at the moment on financial markets because the focus is so much on the COVID numbers. But let's say someone were to come out with a vaccine tomorrow, it'd be blooming interesting to see, what financial markets then started to concentrate upon. Okay, on which note then, let's round it off for today. I think we've probably been prattling on for long enough. So from Mark, Brian and myself, thanks as always for listening. We'll be back next week, and in the meantime, keep up to date with all the key market moving data and events in Econoday's global economic calendar. Stay safe, and we'll see you next time. Bye for now.